Hello, everyone, and welcome to our webinar on expanding your business into Australia. I'd like to begin by acknowledging the traditional custodians of the land on which we virtually meet today and pay my respect to the elders past and present. My name is Billy Wall, and I'll be your host today for InCorp Advisory's webinar on how to best expand into Australia. I'm the head of growth here at InCorp Advisory and our team with a focus on enabling connection through conversations. Today, I'm very pleased to have the chance to speak with our partner, Ghafur Barchia, today. Ghafur is a business advisory and tax partner with InCorp Advisory and has deep expertise in international business expansion, helping family businesses, multinationals, and private wealth clients scale up and optimize their companies. So over the next 20 to 25 minutes, we'll discuss 3 different scenarios for entering the Australian market with the intention of providing you the valuable insights on how to navigate each one. We'll have the opportunity for questions and answers, so please feel free to submit your questions in the box in the screen, and we'll make sure we'll cover them before the end of the session. So without further ado, welcome, Ghafur. Good to have you here.
Thanks, Billy. I'm really excited to be able to share some insights and tips for businesses looking to expand in Australia.
Absolutely. And look, just before we get into it, it's probably worth providing some context around our conversation today.
Yeah.
At InCorp Advisory, we are one of 8 global offices, part of InCorp Global. And a large part of what we do is help growth businesses expand successfully into Australia by offering a comprehensive full suite of corporate solutions. I thought I might just set the scene around what we're seeing, but also what the Australian Bureau of Statistics is reporting in terms of new businesses being set up in Australia. In 2022-2023, there was a 2% increase in number of businesses being set up, or 50,149 new businesses. That is a 16% entry rate versus a 14% exit rate. Now, across those years in 2022 and 23, the 3 industries with the largest percentage increase in businesses were healthcare and social assistance, transport, postal and warehousing, and electricity, gas, water and waste services. Ghafur, I'm interested to know, what is it that's interesting to you about these segmenting increases across these industries?
Yeah, look, they really highlight some broader trends that we're seeing. So for healthcare and social assistance, that's driven very much by the aging population and the government's funded National Disability Insurance Scheme. And the exponential growth in e-commerce, particularly coming out of COVID, has really demanded fast and reliable distribution networks, which has led to a booming market for transport, postal and warehousing logistics. Whereas, electricity, gas and water and waste services, that's largely driven by the emergence of the focus on renewables and energy tech, particularly as Australia, focuses on sustainability and green energy.
Right. And when it comes to, I guess, international businesses looking to expand into Australia, whether they are, I guess, in these industries or others, how are you seeing them approach the Australian market?
Yeah, look, you know what? Great question, and there's so many different ways, but look, I think we could probably summarize it in sort of 3 ways. First is setting up a presence to test the market. Second is setting a presence to test the product, and lastly is setting a presence with immediate scale.
Interesting. And Ghafur, I guess from here, what I'd like to dive into is, can you kick us off by talking a little bit about businesses that want to set up a presence in Australia, whether they plan to have no employees or just 1 employee on the ground? What does this look like and what's involved?
Yeah, look, sure. We see a lot of businesses look to establish a foothold in Australia, sort of test the market, explore the market opportunities that they've already identified in other markets that are probably already mature in their markets. And these decisions can be driven by existing clients who've already established, who are already in Australia. Mm-hmm. Look, typically this involves either setting up a sales office, a client service office, or even logistics office. And in most cases, businesses already have, and usually they already have, a real clear business case or rationale for entering Australia. For example, They might have a potential lead that has progressed to a stage requiring local presence, or already existing clients that require contract negotiation or immediate delivery. Alternatively, they might need to hire someone with a specific technical expertise that's only practical to have employed in Australia. And the thing is, you can go online and you can see that getting started seems relatively easy on face value. Whether you're setting up as a branch or actually setting up an Australian company that requires registration to operate in Australia. Now, what we've discovered consistently is people underestimate the time and underestimate the documentation that is underpinned by the compliance requirements. So, for example, register to operate in Australia, you need what's called an Australian business number. Now, this requires, first and foremost, identification verification. And there are only certain institutions that can do it. Firstly, Australian consulate or embassies, or an apostille. The challenge then is directors, whether that's the branch of the foreign company or the resident directors, is that they're jointly and severally liable for all compliance while operating in Australia. And this process of setting up, depending on how well you get it all done whilst things are starting overseas, can take up to 9 months. And as you can appreciate, if there's a timeline to enter the market, that impacts the speed of market. There's an opportunity cost, and as well as just having to manage the regulatory requirements. The other example is, expand a little bit. So, for example, when they need staff on the ground, the obvious thing is that most often than not, the Australian staff want their remuneration paid with an Australian bank account. And, whilst a lot of international businesses think that because they have a relationship with, what could be a global bank to set up in Australia, the Australian Know Your Client requirements, KYC, anti-money laundering, requirements are often unique and distinct in Australia, and they're their way of doing things, as if you're a new customer. Now, let's say we got the bank account set up. Now we got to set up payroll. That in itself has its own requirements, because you're now having to make sure you're connected and registered with the Australian Tax Authority, or the ATO, Australian Taxation Office. Now, the challenge for a lot of, businesses starting out in Australia in that regard is that often that they think they can just rely on the local staff to handle all that. And most often they're not. They're not experienced. They don't have the qualifications or the knowledge. Then, with all that activity going on, there's the question of, what functions are operating in Australia, and what value is being created, which sort of, starts to delve into the issues of transfer pricing, which, as anybody has heard, the mystique around that, it is, complex. But a lot of the times, most growth businesses probably, disregard it because they think it's an issue for the billion-dollar multinationals. However, the Australian Taxation Office is starting to pay more and more attention to small and medium businesses trading internationally. Now, look, I talk about the problems, and I don't want to kind of, sound like I'm saying it's insurmountable, but there are some ways, that you can make this a little bit more seamless. So, for example, appointing, a local resident official that is usually the professional services firm that helps you set up. So, obviously, someone like us. Having then, therefore, because we're the resident official, we can be on the ground to help set up the banking and the payroll. And then there's just simply, being able to leverage off an outsourced finance function. And at Incorp, we most often than not act as an extension of international businesses' finance function here in Australia. And that just means that the local operations staff that are employed here in Australia can really just focus on what they're on the operations of the business. And then lastly, in relation to transfer pricing, we're in a great position to be able to help work out, what are the simpler options versus, what are the complex options that you need to navigate through. So I know that was a lot, but there's often a there's often a lot that is going up, but certainly in all those issues, we certainly have been able to help.
No, and thank you for those insights, Ghafur. That's really good to know. And I can see some questions coming through on the webinar. I really appreciate that, and we will get to those at the end. So please feel free to include some more so we can touch on those at the end. Ghafur, I'd like to dive into asking you about the second scenario you mentioned, actually, which is setting a presence to test the product. What should businesses consider when they plan to test product fit or develop a product in Australia, particularly using the R&D tax incentive as well?
Yeah, no, absolutely. Look, Australia offers a unique, environment for testing the product fit, and the government incentives are quite generous for businesses wanting to conduct research and development here in Australia. But here's the thing: those businesses need to consider a couple of things. One, businesses choose Australia as a market test product, usually because of the diverse and sophisticated customer base. And this can involve setting up a local presence to better understand customer preferences and refine their products accordingly. Additionally, the R&D incentives are highly attractive for businesses looking to innovate and develop new products. This program provides significant financial benefits, encouraging companies to invest in research and development here in Australia. Now, some of the key challenges we see are a lot of businesses come in and having to make sure that they understand what they have to navigate to qualify. So it's one thing to say you're doing research and development. It's another thing to say that you actually qualify for this explicit criteria. Things like, where is all the activity being carried out? Where are the experiments being carried out? Who's being paid to do what experiment? Is it in Australia? Is it overseas? What's the experiment? These are fundamental questions that have to be addressed and documented to qualify. And look, making sure that as much as it's an administrative process to set things up, from a research development perspective, you need to be able to say that the business or the venture can stand on its own 2 feet in terms of the science of what's being done. So whilst Australia is generous for its R&D incentive, it's also very stringent about its qualification. Now, that shouldn't be an inhibitor. It just means that you navigate through and the requirements. There's actually quite a significant opportunity.
That's really interesting, Ghafur, and I guess that's on the research and development side of things and testing product fit. But what about a business that wants to set a presence with immediate scale through M&A, as an example?
Yeah, look, actually, great question, and I guess as businesses will know, setting up with an M&A means you can quickly gain scale. As with the prior two scenarios, the key considerations, social challenges we see are, firstly, due diligence. Any M&A process requires due diligence, and having boots on the ground to carry out that due diligence, both commercially but also from a compliance perspective, is integral. Particularly around how do the existing contracts, liabilities impacted by the regulatory compliance. Now, for larger, I guess, strategic acquisitions that may involve getting large market share or impact monopoly or government or land, then there may need to be involvement with applications to certain regulatory authorities. Then there's just simply, the post-acquisition integration process, whether it's cultural or operational, so that the benefit of that acquisition realizes the synergy of the combined businesses. So in this case, Incorp's certainly well placed, and we have a lot of experts in this space to help with the due diligence, to help with the regulatory requirements, and as well as helping with the integration of the operations as well.
Really interesting. No, thank you for sharing these insights, Ghafur, and the examples as well. I just want to touch base on the questions that we have coming through the chat. We have a couple in here. Let's start off with our first one from Eric. And Ghafur, I'll direct this one to you. How easy is it to terminate employees in Australia, regulatory-wise?
Yeah, that's a really good question. Look, there are minimum standards, minimum requirements. So let me answer the question. If you follow the rules, it's pretty straightforward, but the rules don't make it that easy. So I don't want the audience to be deluded in thinking that a business can just simply terminate. There are ways that are prescribed from the minimum standards. There are the employment contract to consider from a commercial perspective. So certainly this is where advice is absolutely required when a commercial decision is made to terminate staff.
Perfect answer. Thank you for staying on the fence there a little bit. And it looks like we have someone in the chat that really knows their payment system in Australia. Another one for you, Ghafur. Okay. Can you explain a bit deeper the concept of Australia's superannuation system and what are the obligations of the employer?
Yeah. Look, it's effectively a social security system for funding employees' retirement that's funded by employers as opposed to the government. And there's a huge amount of compliance requirements. There are effectively, it's a percentage of the employee's salary, but then there's maximums to what's required. But in essence, it's an additional remuneration requirement that employers must pay into a retirement fund of the employee's choosing. That's a percentage of the employee's salary.
Fantastic. I'm loving these questions coming through. And another one from Eric here in the chat for you, Ghafur. And I guess this is touching on that M&A piece or potentially investment from a foreign company acquiring shares in an Australian business through primary investment. Is there any tax impact for the Australian company in that instance issuing the new shares?
No, not at all. I mean, that's probably one where it's a really simple exercise. Cash in, shares out. So that's a really simple one.
Pretty simple.
Keep those simple questions coming.
Absolutely. And I'm loving that there's some interest here in multiple scenarios as well. Alexandra in the chat has asked, how long does it generally take to qualify and receive benefits from the R&D tax incentive program in Australia?
Yeah, look, on face value, there is a minimum requirement. So what I'm going to say is simply this. If you tick all the boxes and you go through, you can be looking at up to a month. And I want to be realistic and pragmatic. In the last, let's call it 24 months, the authorities have probably increased their compliance requirements and are certainly watching what's being claimed. And if you don't, how do I put this? If you don't immediately show, or it's not really evident that you are complying with the requirements, they can slow it down by requesting more information, and that's as long as it takes for them to get the information. But if you're let's call it ticking the boxes, so to speak, it's a pretty seamless process.
Right. And I guess for someone that is interested in, let's say, setting up an entity in Australia and doing some R&D, or if it's, whether that's on the market test side of things or through an M&A, do you help clients at all with evaluation if Australia is likely to be worth entering as a market, or only once a client decides to enter would you step into that position?
Sorry, with evaluating whether the market is worth it. Yeah, look, it's a really good question. We've done that. We certainly done that in terms of carrying out, feasibility research with respect to, having access to market research databases that we can compile a whole bunch of data that helps give clients a sense of what is the addressable market, and who are the competitors in that market. So we certainly help with that insight, and that. But most often than not, we find that clients have already done that work, and even if they've done that work, they've had the experience of setting up in overseas where they know they've set sort of a bit of a, this is how much we'll invest to test the market, to work it out themselves, as opposed to empirically looking at the data themselves. So, whilst I said earlier that there's the challenge around make sure the documentation right and the timing and the setup, that's often faced when businesses try to do it themselves without getting professional advice, right? And so once it is set up, it's actually not that arduous a task. It's not that expensive to set up from an investment perspective, and then really it's just an exercise in doing the market research themselves.
And another question here, I'm glad that everyone's thinking of this holistically from multiple angles, is you touched on payroll and finance function, and I was wondering, I guess the chat is wondering, how does that actually look like on a day-to-day, where being an extension of an existing finance team as a service provider? How do we work with clients in that situation?
Yeah, look, I think one of the challenges that is faced with overseas business setting up in Australia is time zone, right? And but also in relation to any queries that may be needed from employees with respect to their payroll, and because we're the ones processing it, we have the data, and with the the growing seamlessness of cloud technology from a payroll perspective, we are the first line of inquiry, of assistance. So the Australian staff feel like they have an Australian team to lean on with respect to the employee, their payroll questions.
Interesting. And I think getting a bit granular here, I like this question, and let's see if we can break this down a little bit before. But the situation is this from someone in the chat. An Australian company that repays shareholders' loans to its individual shareholders, what is the tax treatment for the shareholders receiving repayment of loans in such cases?
Yeah, it's a really good question. Because on face value, shouldn't be an issue, right? On face value, shouldn't be an issue. But there's legislation that tries to look, there's this concept of substance over form. So what's really going on is really the question. And if, putting it crudely, if it smells like it's dividends or any sort of distribution of profits, then there are rules that effectively say, irrespective of how you've documented it and are recorded, there's, we have this issue of withholding tax, say, for example, dividends. So the Australian company that's, paying that money may be subject to withholding tax, say it's on dividends. Now, the other argument is, well, what if that's not all loans? What if embedded in that is payment of interest? So again, we've got withholding tax. Anybody who knows about paying these passive incomes cross-border understands that most countries have a withholding tax requirement. So really, it's if it's really straightforward, obviously that's not the issue. But one of the things that we help clients do is just make sure that it's substantiated, and it's certainly that there's no exposure. Should never say no as a professional. That there's very little immaterial exposure because of the substance of the transaction.
No, thank you for sharing that. I think the last one we'll finish off on here, just noting the time before, but this is a great one, I think, to wrap up for anyone sitting there watching and considering expansion in Australia. Ghafur, what questions do people need to ask themselves when considering setting up a branch office versus a subsidiary, as example, in Australia? What questions do they need to ask when they consider the structure?
Yeah, okay, good question. So, how important is it to set up in Australia? Asking the question around, what is the return on investment? What have you set as that return on investment? Because there's cost to set up. There's a compliance requirement, and not only in dollars but in time as well. So, asking the question of why is Australia important hopefully helps frame the appreciation of what is needed to do it well. So that's just the immediate setup process and whatnot. And then the other question is, given what we're trying to do in Australia, what are the ways that the government incentivize setting up in Australia? What are the opportunities? And then lastly is, because we've said, we've asked the question, why Australia and what are we doing? Then begs the question, have we set this up so that when we have transactions between related parties, that it's all arm's length? And if it's not, how do we document it? How do we make sure that we are? So
love that. I think
So just and look, and just to fun us, and I guess what I don't want to leave people with is just this sort of really basic question. Obviously, every business has their own unique situation and unique needs and concerns, and certainly encourage our audience to reach out directly if they want to talk to someone like myself to ask more detail about their specific circumstances.
Yeah, just conscious for time, and I see another question from Chris in there. But Chris, we can definitely touch base with you and connect with you via email to answer your questions around nominee, local director, and tax advice structuring. We'll definitely reach out in regards to that. Thank you for your insights, Ghafur, and sharing your knowledge and answers. This has been a very, I think, fruitful conversation. And for everyone tuning in as well, thank you for joining us today. We hope that the webinar has provided valuable insights into, I guess, expanding your business into Australia, gaining that knowledge and really preparing yourself. If you have any further questions, feel free to reach out to us. We will schedule a complimentary call to understand how you can best expand into Australia. And of course, everyone will receive a copy of this recording and the supporting collateral as well. But once again, thank you everyone for joining us. We really appreciate your time and we hope you have a wonderful day. Thank you.
Thanks, Billy. Thanks, everyone.